Richard Yetsenga is with us this morning. He's Chief Economist of the ANZ Group. Richard, very good morning to you, and always a pleasure speaking with you. At least good morning from where we're sitting. Let's start by just talking about this sense that the worst is over on various fronts. Tariffs doesn't seem to be a huge problem right now. The Iran-Israel crisis for now is behind us. And is that something you think global equity markets are going to really dive into?
Well, markets are obviously liking whatever's going on. I think one of the misconceptions this year has been this idea that either the world's completely fine or it goes into recession. And I don't think either of those states are the right way to look at things. The reality is there are military conflicts around, there are tariffs still, and the China deal, for instance, we don't have a lot of detail about that. There are some inflationary impulses still in the US, even if they're a bit milder than people thought. I mean, markets certainly moving a long way away from the idea that it's going to be a recession, but I also don't think the world's completely fine and scot-free either.
An important point to make, because Richard, I want to actually, and very good morning from where I'm sitting, and good afternoon to you in Sydney. But I want to focus on the latest data points. Jobless claims better than expected, but at the same time, this uncertainty in the US with regard to the monetary policy there, because they're talking about replacing Jerome Powell earlier than anticipated. That seems to be having a bearing on bond yields as well as on the dollar. And so I'm just wondering, from an emerging market standpoint, with that directional move of the dollar downward, is that positive news?
I don't think it's positive news because, of course, even though some asset markets have done well, bond markets are saying that there's a higher risk premium at the long end of the US curve. They're pricing in a more rate cuts. So the dollar down does seem to be more of a signal about weaker US growth than about something that says the US is in some way exceptional. And this idea, again, that there's good and bad news out there and we need to navigate that. On the one hand, Section 899 potentially won't get passed, with the US Treasury providing some advice on that, which has become public. But also, on the other hand, this idea that the next Fed chair will be announced early, and there's some concern in the markets that perhaps the next Fed chair won't be as tightly attached to the US inflation target. It might be a bit too close to the house. This is a critical issue, I think, for markets over the next 6 months. Remember, Chair Powell's term ends in May next year. If we have an announcement in the next couple of months, of course, that's for markets, that's effectively going to bring forward that judgment point where they have to decide, you know, a US asset's a great story for an international investor or not.
By the way, there was this story today which spoke about this, that the Michigan's index of consumer sentiment was stuck at one of the worst readings on record for 2 months after plunging 29% in the first 4 months of 2025. And apparently, over 79 years of this survey, a drop this large, this fast, has almost always predicted a recession.
Oh,
so,
okay. So another strong indicator.
Yeah, I mean, yeah, maybe. I mean, there's just too many indicators flying around, so difficult to gauge that per se. But who knows? I mean, does this result in the Fed having to cut earlier? And I mean, it's all these things that Richard was speaking about as well, a new Fed chair. Who knows? Actually, Richard, coming on that, because the US assets are looking slightly iffy, if you will, for a lot of people, there is a talk, none other than Jeffrey Gundlach talking about it, right? That diversify out into non-dollar denominated assets, out of the dollar as well, etc. How are you feeling about emerging market economies like India, for example?
Oh, I think there's a very strong diversification story globally. 72% of MSCI developed markets is the US. The US is nearly 50% of MSCI, the MSCI World Index. It looks disproportionate to the US's share of global activity, which is 25% or below, depending on which measure you look at. I think there's a very strong diversification story. For individual emerging markets, I suspect investors will remain a bit hesitant until we see some concreteness around the trade deals. And obviously, with China, we're starting to come out of the darkness into the light on trade, but we don't fully know what the deal looks like and what the detail will be. In India, we're still very much feeling our way around in the night because nothing has been announced from either side. I'm hopeful, but we've got to wait, I think, a few weeks to see.
Okay. Richard, just taking that point forward on India as an emerging market choice. Now, signs very clearly that there is the trade deal coming in. Does that change things one way or the other in terms of fund flows that we could see? Because they're picking up, but not quite. I mean, the strength we're seeing is also a lot from domestic investors right now as far as India is concerned.
Yeah, look, I think that's a very valid point. Domestics in the driving seat in India relative to external investors. But of course, I think external investors would love to have a great reform story in India to leverage off, particularly as they look for markets that are alternative to the US and also, in fact, potentially alternative to China. And maybe the trade deal is something which drives the next leg of reform in India. There's been a great 10-year story with a whole range of very substantial improvements in the structural story, but you would think a lot of those are already in the price. You know, what have you done for me lately probably is where the markets currently are. So I'm hopeful that maybe for issues which might be politically complex in an India domestic setting, we've got some external impetus here which maybe can unlock some of those and drive some agreement.
Okay. Thanks so much for joining us, Richard. As always, pleasure having you on the program.